Are you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. Being self-employed and trying to buy a home is not as difficult as you think. Need more details? Well, stick around to find out. Let's get unpacking. Now, are you self-employed and want to know your options to qualify for a home loan? You don't have to adjust to the lenders. They are adjusting to your career choice. Let me explain. I'm excited to dive into this topic today. Most people think only business owners are self-employed, but that's not the case at all. So let's clarify who is considered to be quote-unquote self-employed. Number one, you are self-employed if you do not work for an employer and do not get a W-2 form. Number two, if you are a 1099 contractor, means a company contracts you to do a job with a start and an end date. Now, these dates can be extended from temporary to permanent work. So if they extend your work, that means they like you and they need more help, then they can extend the dates, but you're still working for the company as a 1099 contractor. Number three, the obvious, you are the owner of the business. There are a couple of options to show proof of the business that is required by the lender. As a business owner, your business can be registered with the Secretary of State, so your loan officer should be able to pull that license from that website. Or you can get a CPA letter stating your business type and years in the business. Most lenders will require at least a 2-year history of self-employed to qualify for a loan. Now let's get into the documents needed to qualify for a loan. The first category I want to go over is a true business owner, a C Corp. We, the loan officer, would need a 2-year current history of personal returns, which is the 1040 form, and business returns, which is the 1120S form. Now, a lot of the business owners pay themselves, so they W-2 themselves. So this form is called a K-1. This will be included in the tax documents that they send to you. It's not going to be in the tax documents, but it's going to be an additional form that comes with the tax documents. Now, the lender also requires a P&L and a balance sheet for the most current year. So it's obvious we don't do our taxes right away. So for the year that they're in, 2023, they will need a P&L and a balance sheet. And then the previous year, which is 2022, they will need a full P&L and a balance sheet, since most self-employed business owners don't do their taxes right away because there's a lot of documents they have to collect and everything, documented for their CPA. Now, the purpose of a P&L is only to show if your business is stable. We will not use the income on the P&L because it's an estimate for the current year and can be done by the owner. So the business owner can do this themselves. It does not have to be an audit one from your CPA, as those can cost thousands of dollars. The income used to qualify will be the average of the 2 years if the most recent year has an increase from the previous year. So for example, you have 2-year tax returns, 2021 and 2020. So the 2021 has a higher amount than the 2020, then we will average the 2 years. Now, if the income for the most recent year is lower than the previous year, then we will use the amount of the lower year. So that means if your most recent year is lower, we only use that one and we average that one. Now, if you file any extension, because you're allowed to file extensions, then we would need that extension form with your taxes once it's done. Or if it's not done, then we still need it to include for that year to explain why it's not done. Now, there's a caveat to this on some of the programs where if the decrease of the income is more than 25%, then it may be a decline in qualifying. Now, Freddie Mac has a caveat which is to your benefit. Freddie Mac is a conventional loan. So if you've been in the business for at least 5 years, you can qualify just using 1-year tax returns. So the most recent year, of course, you can't just pick any year you want. It has to be the most recent year that you've done taxes. All right, so as I've mentioned, the K-1 and balance sheet, I want to explain what those are. K-1 is equal to a W-2. So if you work for a company, they give you a W-2. If you own a business and you want to pay yourself, it's called K-1. Now, balance sheet is equivalent to assets like bank statements. What it is, the purpose of this is to use to show that your beginning balance minus your expenses equals a positive number. So you're doing well, your company is stable. And so if it shows a negative, then you definitely have to figure out how you can have less write-offs so you can be in the positive. Because obviously if you have negative income, the lender wouldn't lend because you're in the negative. How are you going to repay back your loan that you're trying to pre-qualify for? Now for the P&L, which is the profit and loss, and a balance sheet, if you need to get these forms, there's tons of examples online. You just Google it and you can just copy the examples and replace obviously what your expenses are, and just the format is pretty simple. Keep it very simple because like I said, this is not going to be audit. It's just for the lender to make sure that your business is still stable or making money. So now if you have QuickBooks, that can easily be produced through your QuickBooks. And those are, of course, right on the numbers and everything. So if you have a business that's in the positive, no issues, then you can just create a form in your QuickBooks. Okay, now let's go over the 1099 quote-unquote self-employed people. If you are 1099 or sole proprietor, you would have personal returns with a Schedule C. That is where you can list all your write-offs. There's no K1 because you don't own the business, but the Schedule C allows you to write off anything that you have used for the business, and you would need to show, you need to provide proof of being in the business for 2 years. You will also need 2 current years of tax returns with any extensions if you have filed it. Now, a P&L is still required, but not a balance sheet since you don't have to have a business account because you don't own a business. Now, understand that the benefit of being self-employed means you can have a lot of write-offs. So if you don't qualify using your tax returns, do not panic. You can still qualify with our bank statement programs. Now, most lenders have all these bank statement programs. They require 12 or 24 months business bank statements. Depends on the program that you go with. What I do is we take your total deposits and divide that by 12 if it's 12-month bank statements, or we divide that by 24 if it's a 24-month bank statement program. So we use 50% of that income, or if you have a CPA letter that can state your expense factor is less than 50%, then we'll be able to use the higher income. Your loan officer will figure that out for you. So no tax returns needed if you're doing a bank statement program, but we will still need to verify your business license. So we can go on the Secretary of State, or we can get a letter from your CPA. So if you are self-employed and you don't qualify with tax returns, bank statement programs are the solution. It's easy. We just do full statements. We just look at the deposits, and we don't source the deposits. So, obviously with business bank statements, you get deposits daily, and it's from 20 grand, 8 grand, 2,000. We don't source it. So that means we don't need to know where it's coming from, as long as we just use the deposits and use the factor and divide it. So it's pretty simple. If you have enjoyed this information, make sure you give me a follow. And if you have anyone that may benefit from this, please share. More episodes to come. And as an active mortgage broker and a mentor, if you have any questions, you can reach out to me through LinkedIn, Paige Ashby Lending. And all of my other contacts will be listed in all my episodes. Thanks for being part of Unpacking the Home Advantage.